Mortgage interest rates have dropped dramatically over the last few weeks. That's great news, but what does that mean for you? Well, we're going to dive right into that in just a second. What's happened over the last couple of years, and if you've been watching the real estate market at all, you know that home sales have slowed. So in 2024 and so far in 2025, there have been a few of the slowest years in the last 40 in terms of real estate sales, particularly in the DFW marketplace. A big driver for that is we saw a huge uptick in 2021 and 2022. Home prices went up, home sales went up, and that was all driven by really low interest rates. We had homes interest rates at 4%, then in the 3s, and in some cases even down in the 2s before the Fed started raising interest rates in mid-22. So when they raised them, though, they raised them dramatically. I mean, they raised them a lot and they raised them fast to really slow down the economy, to slow down the real estate market. And it worked. So we've seen the stagnation over the last several years. But what's happened now is we're seeing rates come back down. We're seeing mortgage interest rates come back down. The Fed has kind of signaled, or everybody's expecting the Fed to lower rates next week. So we're looking forward to seeing that. But some of that's already priced in. So what I thought I would do is let me show you the impact of those rates coming down and what it actually means for a payment. Let's jump right in here. So what you're seeing here is if you were to purchase a $400,000 home and at a 7% interest rate, at a 7% rate, then you see the payment is $2,661. Well, but if you bought that same house and you got it at 6.29%, well, that payment is going to be a lot lower. It's nearly $200 per month lower. Think about the impact of that. That's $200 per month over 30 years. I mean, that's an extra date night or two a month. That's an extra a lot of things. You could do a lot of things with that. So that's a really big shift. So. Now you could say that, well, I live in Flower Mound. There's Southlake. There's a lot of areas in North Texas where you can't buy a house for $400,000. So what does that mean? Well, at $600,000, at $800,000, the impact is even bigger, right? At $800,000, the impact of that shift is double. You're saving $350 to $400 per month each and every month over the course of 30 years. So we're hopeful that we're going to see the Fed lower the Fed rate. That's not mortgage rates, but the Fed rate next week. That's kind of already priced in the pricing we have, but we do expect further mortgage interest rate decreases when that happens. So if you're curious about what this means for you, let's talk about it. Would love to chat about your situation, kind of run some numbers for you on what all this might mean for you. We can help you find the home that you're looking for and time it in terms of selling your home so that all works for you and we make it as smooth as possible. That's what we do. Thanks so much for watching. We'll include a link in the description below, so if you want to schedule time to talk to us, then we'd love to do that.